In this deep dive, we're going to look at improving bars and candlesticks with footprints. I want to show you some very common patterns that you see primarily on candlesticks and show how a footprint can greatly enhance what that candlestick is showing you and help you read it better. Now, I'm not getting into a whole bunch of candlestick patterns. There's a lot out there, and there's a lot of great books on those. You could actually take those books and those patterns, and then using what you learn in this session, use that and apply it to those unique candlestick patterns. So there's a lot of them. I'm going to cover the three main candlestick forms, and that should give you enough to go off of and be able to really expand upon it and hopefully come up with some real edges outside of what you learned just here. So let's jump right in. So just a quick review, if you haven't watched some of the other deep dive videos yet. Market Delta is the creator of the footprint chart. This is something we innovated with back in late 2002 and brought to market in 2003. And the whole idea was to allow traders, to see inside the chart. With electronic trade data, which everything is now, there is so much more information, granular information, to be able to create a much better view and understanding of what's happening in the market in real time at any given moment. And the footprint just allows you to see inside the chart, breaks it up in a very logical way, and allows you to hopefully make better decisions based on what you see. As I mentioned, it was born in 2002, right at the CME. That's where our offices were at the time. And then it became publicly available in 2003. So a quick story of how that all happened. I personally was actually trading at the CME upstairs in an office, and I had a Squawk Box service quoting me the pit, the S&P pit. And so I'm hearing the pit in my ears, but I'm watching the screen because I'm trading off the floor. I'm watching the dome, watching my charts, and it seemed like I'm getting all this information in my ears of what's going on, and it really wasn't translating on the screen. I'd hear them buying 100, selling 100, lifting offers, hitting bids. And the screen was just dead silent, just showing, prices trading. The charts didn't give you the idea, had no understanding of, was volume increasing on that move up? Was there, were the buyers lifting into offers and trading aggressively, buying it aggressively? And so, long story short, the footprint was created based on that need. And it was really just a personal tool at the time, but other traders saw it and wanted it, and it began. We commercialized it, and that's what you see today. So that's the quick story. We have some other videos on that if you're more interested, but it was simply an innovation that came about as a need of a trader, but also through technology, because as the markets went from pit to screen, there was all this added data, and it was just a perfect time to leverage all that. So I'm going to give a brief explanation of the footprint anatomy that's already been touched on in some other deep dives, but I'll touch on it briefly here. And then we're going to look at the three core candlestick patterns and their meanings, and then how it translates from a candle to a footprint, how you can use the footprint and the delta for the bar to improve the read of what you're seeing in the marketplace. So let's just jump right into the anatomy part first. The footprint is a chart type. I've said that in other deep dives. It's a chart type. It's not a system. It's a chart type that lets you look inside the bar and well beyond that open, high, low, close that is just shown in a candlestick or bar chart. So think of it as like that 3D view of what's happening, or the X-ray vision of what's taking place in the market in real time. That's you obviously have the ability to look back historically, but it's that real-time picture, that current bar that's building, being able to extract a much deeper understanding of the auction that's taking place in the marketplace to hopefully position you better on the right side of the market. It's going to display price. The footprint displays price, volume, and order flow in a single, easy to read data point. So instead of just viewing a price, you actually get all these added pieces to give you a better view of what's taking place, which is volume and order flow. And then, I guess last but not least, it's just a logical breakdown of a bar price by price. Nothing fancy here. It's leveraging the data that's available. It slices it up and gives you a understanding price by price of what's happening, how much volume, and then what that order flow is. So let's take a look side by side of a candlestick versus a footprint. I think this has been touched on in another deep dive. We're reinforcing it here. It's important that you understand they are essentially the same thing, except that a footprint is more of an exploded view of a candlestick, that X-ray view, that 3D view, whatever makes sense to you, that's what it is. So on the left, you've got, let me turn on my laser pointer. Over here we have two candlesticks, an up bar and a down bar. And then over here we just have a single up bar footprint. So candlestick, you've got the open and the close in the case of an up bar. And we know it opened lower because the body of the candle is green. On the down bar, the body is red, which means we know it opened higher than it closed, or said another way, it closed lower than it opened. And then these wicks are, the wick doesn't have to be there, but it just represents the highest. This would be the high price. This would be the low price. And the wick is just shows that it did travel through these prices and established a low, and same with the high. Okay, so I'm not giving an exhaustive description of candles and all that. I just want you to understand there's really an open, high, low, close. There's a body, and then there's a tail or a wick. We kind of use those two terms interchangeably. Tail or wick would represent the stick portion of a candle. Now, moving over into the footprint, what it does, as I said, it slices it up price by price. So that's what you see, is you're seeing volume and a breakdown of volume over here on the footprint. Each cell, if you wanted to think of it, or each row represents a price. And you see the volume and order flow that was contained therein. But as it relates to a candle, you see this green bar, this green bar right here. This would represent the open. It opened at this price, closed at this price, and these two up in here would represent the wick, meaning that it represent this, this portion up here, and then the section right here, this low price, this would be the lower wick, which would represent what you see here. So you still have all the attributes of a candle. It's just now you've got the exploded view, or this understanding of each within each price, the volume and the order flow. All right, so let's go ahead and move on. So footprints improve candlesticks, and we're gonna I think see that here as we go through these. So first, let's focus on price. Each row or cell in a footprint represents price. I think I just kind of mentioned that. This is just a kind of a zoomed in view. Here we can actually see the price scale though. So each price, as you see here on the right, we now can see the footprint data right here. So this would represent the volume and the order flow. You can see how many prices make up a bar. 1, 2, 3, 4, 5. That's not necessarily logical or easy to extract from a candlestick. With a footprint, it's easy because you can really see, you can just see how it's all broken up. So it makes it easier to get an idea of how many prices are trading, kind of the range and things like that. Volume. So depending on the footprint type, each row will show you volume or there's different footprint types, and that is covered in a different deep dive. But for the most part, you can understand how much volume. So here, you would add up these two numbers, and that would tell you how much total volume. So here we had 9 total contracts. Down here we had 12. And here you can see we've got about, what, 550 or so. So anyway, you get the idea. You can get a sense of where liquidity is happening, and it's always interesting at the extremes. Are you seeing very much volume occur, or did they just tag it? There's not a lot of interest, which is indicative of price probably moving away from the level back into where liquidity exists. I don't want to make too much of that. I'm just pointing that out. That's some of the value that can be extracted. But like I said, it provides an indication of trader interest and participation and which prices are attracting volume. You know, big traders have big orders. That's why they're big traders. They have a lot to do, and they tend to be more, they want to be able to blend in and be able to transact where where there's liquidity, where they can go in and buy 100 or 1,000 without much impact on price. They don't want to have to do a big order where there isn't a lot of liquidity, and it ends up creating a lot of price action, and they don't get a good fill. So anyway, let's now look at the third component, which would be order flow. Depending on the footprint type, each row provides an indication of buy or sell pressure. And so, not going to get into great detail right here, but what we're talking about when we talk buy or sell pressure, we're talking about delta. Delta is the net buying or net selling at a particular price level. And this isn't the best footprint to show it. This is the imbalance footprint. But the delta footprint or profile footprint or even the bid-ask footprint, color code the background to give you an indication, or really it's not just an indication, it's very discrete. It shows you whether it is a more aggressive buying or more aggressive selling at each price. So you can extract that information as well. So again, we're not just seeing price, we're seeing volume and order flow, and you're going to see patterns, especially as you get more familiar with these. You see unique patterns, and things just jump out at you because of what you're able to see. All right, let's go ahead and move. Oh, yeah, the last point here, bar delta shows order flow for the entire bar. So that's covered quite a bit in the deep dive called Everything Delta. The bar delta would sum up all the deltas for a particular bar and give you just a total bar by bar read of net order flow. So that's very helpful, and it's a way to kind of step outside what you're seeing within the bar to look at it on an entire bar basis. So if you haven't seen that session, it's called Everything Delta. Watch that. I think you'll get a lot out of it, but that's an important component to this. So let's look at our 3 core candlestick patterns. So these are the 3 patterns that we want to look at. They show, now this should say strong. This is strong, this is rejection, and this would be indecision. And what we are looking for, or what I'm going to explain, is when you see this pattern on a candle, any of these patterns on a candle, I want to then show you an example of that same pattern on a footprint and show how you can use the value-added information shown on a footprint to really make the candle come alive. Okay, so that's what we're going to look at. And I think it'll really, if you've ever had a hard time connecting to candles or even bar pattern, you're going to find that seeing the footprint as it relates to these candlestick patterns, it's going to become much more, it'll make much more sense to you, hopefully. All right, yeah, there it is, strong. So let's jump right into the first example, which will be our strong candlestick pattern. So I'm just showing you an up bar and I'm showing you a down bar. Again, actually, let's go back to the previous slide. So remember from when I compared the candlestick and the footprint in an earlier slide, this would be the open and this would be the close. So this one opened on its lows and closed on its high. That would be a strong bar, strong up bar. Strong down bar opened at its high, closed on its low. Where a rejection bar opened here, traded all the way down, got rejected, and closed at its high. That's you can see what I mean there. It's an up, closed higher than it opened, but it traded all the way down. Versus this one opened here, right here, it opened here, it traded all the way up, got rejected, and closed right down here at its lows. And then these ones just travel randomly, kind of they have wicks or these tails on both ends a lot of times. It's kind of been, it's more of a random trade. I call it indecision. There's not any price direction. The bars heavily overlap, which you're going to see here in a moment. And so strong, rejection, and indecision. So let's take a look at these. So a strong candlestick pattern consists of elongated bodies, meaning just they tend to be longer bars. So if we're looking at time-based bars, you're going to see these strong candlestick patterns will tend to be longer bars, taller bars, more prices that traded in them. There's a lot of impetus or conviction within those bars. They have short or no wicks or tails. Now, it's not real common that you're going to see a bar literally open on its low tick, close on its high tick, or vice versa. So a little bit of a tail is okay. What we want to see is a big elongated body where it opened at one extreme and closed at the other. That is really what we're looking for. That is the true pattern, but this would be the most strongest pattern where there's no wick or tail at all. And then longer comparative ranges. I've mentioned that already, but basically these strong candlestick patterns have long bars compared to a lot of the other bars around them. Okay, so here's just a quick example of an actual candle and the type of bar that I'm looking for. So notice the arrows, I'm pointing to the bars that I want to bring your attention to. These are the strong bars. Notice how they're elongated, right? So they're longer. The ranges you see on these bars are double in most cases what you see of all the other bars around them, and they also exhibit the open and close at each of the extremes. Very small wicks. In fact, this is one of those that has no wick at all. Very, very strong bar here. So it represents conviction on the part of sellers, which would be the red candles, or buyers, which would be your green candles. Okay, so you've seen these things a million times probably, but you've maybe never thought of it in this light. And so that's what I want to draw in your attention to this pattern, but then really show it on the footprint because it'll become much more alive to you. This pattern that we're looking at, these strong bars, they tend to occur at the beginning or an end of a move. So I kind of think of it as initiation or exhaustion. You can look through charts and you'll see examples of that, where this may have been exhaustion. I can't see what happened before these, but it may have been coming down and this was exhaustion, rallied up, went sideways. Notice these bars. We'll look at these kind of later, but notice there's a lot of indecision here. Heavy overlap, lots of tails and wicks, just overlap, not a lot of conviction. Then boom. This is that initiation. This is a very strong bar and probably kicking off a move in the other direction. All right, so length of candle is indicative of strength. I've mentioned that a couple times, but it helps to reinforce the idea. The length is indicative of strength. And then initiation versus exhaustion, which I just mentioned. All right, so now let's go. We're going to take that same concept and we're going to move into a footprint. What does it look like? What does this pattern look like on a footprint? Well, a strong footprint pattern consists of mostly positive delta footprints in an up bar and mostly negative delta in a down bar. So what we look at here, this would be a strong up bar, and you may say, well, why do you say that, or how do you know? Well, forget the footprints for a moment and just look at the candle portion. Remember this little edge on the left of the bar? That's your candle body. So what we're looking at here, it opened here, closed here, and this is the wick at the top. It closed almost near its highs, and notice there's almost no wick at the bottom, just a single price. That's what I mean. So that's your candle portion. Now the other part here, and this is really where you get the footprint, what the footprint brings to the equation, is all the individual footprints that are contained within the bar, and especially the body of the candle here. So what I like to see within that body of the candle are mostly green footprints in an up bar or mostly red in a down bar. Okay, that's where those are the types of things we look for. Confirms it, gives you conviction that the move is truly driven by buyers in this case. The buyers were more aggressive, and well, that's that. Point number 2, a positive delta for the up bar or a negative delta for a down bar. So we have an up bar here. So if you look down here at the bottom, this is our delta. This is a delta bar, we call it. It's actually called the Delta Bar Study in Market Delta Desktop. And it represents how delta traveled. Not price, but delta. This is perfect. It's actually the same shape we want. There's very little wick at all. There's almost none. It opened and it just rallied, closed real strong, almost at its highs, just like the bar. So this the delta confirms price. Perfect. That's what we want to see. There's a high correlation between price movement and delta, and this underscores it, and it also confirms the strength. If this had pulled back significantly and yet we had price close on its high, that's a divergence, and that should put us on guard. But that's a little more, that's really something for another presentation. But the whole point here is this is the Delta Bar Study, and it has this similar or same shape or pattern that we see in this strong up bar. All right, so strong footprint, what to expect? It usually occurs in 3 places. And when I say strong footprint, I also mean the strong candle pattern that I'm showing. This is the first of 3, but it usually occurs in 3 places. The start of a move, which would be your initiation or breakout. Remember back to that candle pattern or the candlestick chart we looked at a couple slides ago. The start of that move, that big bar, far bar on the right hand side, that was initiation or breakout. The other time you'll see this type of pattern is in the end of a move. It's kind of exhaustion. It's where everybody that is throwing in the towel, They can't take the pain anymore, and it's a scramble to get in or get out of the market. And a lot of times it's the exhaustion, it's the end of a move, and the market will reverse from there. But a lot of times you see these big, strong bars come at the end of a move. And when I say strong, I don't mean strong in so much that it's a continuation, because in an exhaustion, an end of a move, you're going to see these big bars, but it is truly exhaustion. That's why it's always important to understand context. You can't just look at a single bar. You have to be able to look where does it just come from, and where are we at in relation to the bigger picture. So that's important. I just want to make that point. And then multi-bar move, this is be an area where we get price relocation, where you have strong bar after strong bar after strong bar. That is a very strong pattern where you get them price after bar. That is indicative of strength, but it's also conveying price relocation from one area to the next. And you'll see that pattern sometimes. All right, so here's just a full screenshot here. This was crude oil, and this is really one of those where you get that breakout or the initiation. And so we're looking at this bar here where it was in some congestion, breaks out, opens right near its lows, and explodes higher. Didn't close right at its high. It definitely did pull back, but you can see what this looks like. You can also see what the Delta bar study is showing us down here at the bottom. Goes sideways, and then we get another one. Opens near its lows, closes near its highs. Notice the ranges of these bars. The range is important in these bars. That's where you're able to see that it is truly strong, because it's requiring a lot of prices. They're driving price in a single direction. And again, you can see what the Delta bar study shows us. Okay, not going to spend too much time on these. I really want to convey how the footprint can provide that added understanding to a candle. Now, I want to make one point on this. You see this bulge in volume here, and it's red, right? Remember a few slides ago I said you'd want to see mostly blue or green, and we do see that. This move was a quick move up, and then it ran into supply, which capped this impulsive move higher. This is true footprint value right here, because what you see is you can understand the move up, but then when it runs in, it's like running into a wall, and it took a while for it to break down or chop through the wall. But this is great information that you'd only see on a footprint, because it'll tell you that the market's setting up for at least a pause or potential reversal. But you're seeing absorption occur. This isn't more of an advanced concept, but truly information that's only available on a footprint that I want to bring to your attention. So these are the things you're going to get to see and begin to understand the more you use the footprint. All right, next, we're still on this. So footprints, the strong footprint pattern provides more granular data, better for making decisions. It's also going to help you qualify and confirm those opportunities in real time, as I just described that, what you saw in that previous footprint chart. And we really do want that bar delta to confirm the impulsive move. It really has to. If it doesn't, you should be extremely wary of the move, and it's a great 1-2 combination. So the footprint arms you with more data in a very visual, logical manner to make hopefully a better decision on taking the trade or not taking the trade. Many times the footprint will keep you out of a bad trade. We get that all the time from users, how it's helped them eliminate some of the bad trades they were taking, and because they're better able to understand what's taking place. So let's move on now to the rejection footprint, right? We're gonna rejection pattern. So here's what that pattern, you look to the right side here of our example. We have this rejection candlestick pattern where we open, we travel in a we open here, travel in a direction, it gets rejected and closes at the extreme, at or near the extreme. So that is what this pattern is on a candle. It's exactly what you'd see on the footprint. Has a compressed body at the extreme end of the bar, and it has long wicks or tails. So a lot of times what you're going to see is the wick or the tail will be 2 or 3 times the length of what the body is. The longer the tail and range, the bigger the rejection. All right, so the wick should be 2 to 3 times the body or more. But that's what we want to see, and that tells us we've seen at least a temporary rejection of the move. And oftentimes it's the other time frame participant, the longer time frame trader, the institutional trader, that'll cause this type of pattern to occur. Now, I want to say that if you're looking at short time frames, 1 minute, 2 minute, 5 minute bars, I don't want to make too big a deal about the other time frame trader. But when you see this pattern on their longer time frames, 30 minute, 60 minute, daily, weekly bars, it definitely is an indication of those longer time frame participants, because what it did, it shows that the market came and tested some levels that they wanted to either defend or they wanted to establish positions, and it drives the market in the other direction. So that's why we call this a rejection candlestick pattern. And I know there's unique candlestick terms that describe these. I'm not getting into those terms at all. I want to talk in more these general terms of strong, rejection, and then indecision. And you can take those 3 fundamental patterns and apply them to the unique candlestick terms that are available in all the books or the multi-bar patterns that you'll see. So let's move on. Here's a rejection candle. And so this was one, you're actually going to see, I think, the full chart of this in a moment. This was the open for the day. It actually opened here, traded up, got rejected in a big way. Notice how there's a lot. This is probably 4 or 5 times the body of the candle. Got rejected, and notice it came right back to test the open, and you'll see how that turned out here in just a moment. So it represents rejection of new prices, often by other time frame traders. The length of the wick of the tail is indicative of the rejection strength. I've already said that. I'm just repeating it because it's so important that these things be said multiple times just so you can sink in, so it sinks in, and you can understand just really what it is showing you. All right. So this is a kind of blown up view of the chart we just looked at. It had opened here, traded up, was rejected. The thing is, it gapped open. Look at this. It gapped open strongly. This is why this is so important. Gapped open, tested new prices well beyond where it gapped, got rejected, and then boom. See these big bars? These are those big strong bars that we're looking for. So this is nice because you got price relocation, and then this was that continuation. All right. So let's move into a footprint. Look at this. We want to look at this more of an exploded view on the footprint. Oh wait, here's another example. Rejection. So I'm just showing a couple examples of what a candlestick, and we're going to show. I'll show this on the footprint as well, but this big tail. And what's nice about this tail is that it's a retest of a known or recent low. So what it did is it had opened, came down, retested, it was rejected strongly, well off, and closed well off its lows on a kind of a double bottom or a retest. That's very, very nice pattern. And we want to be able to really zoom in and see what we could extract here on the footprint. All right, so before we do, let's just look at a footprint in general of this pattern type. What is it? What does this rejection pattern look like on a footprint? Well, bar opens, travels in a direction, gets rejected, and then closes beyond the open near the extreme. So look over here on the far right side. We got a footprint with our delta bar, and this thing opened here, traded down, was rejected, and closed at its highs, or at or near its high. So this is a pretty good example. I would like to have seen this maybe be a little more compressed, the body, but I don't want to make, things aren't perfect when you're trading. They never are. And so the main idea here is to understand what we're seeing. Now this is called the footprint profile, so I don't got any actual numbers or values, but it does show us the volume. And in this case, we can see that it was the volume as it traded lower, it kind of dried up. It just dried up. And well, that's what at least I would extract from this. That's one of the things. The other thing here is the delta bar. It exhibits a very similar pattern to what we see on the footprint. Well, that's important, because if this delta, we want to see that the delta really was rejected, or it came well off its lows as well to confirm this price direction. If it didn't, then I'm very susceptible to the fact that it closed near its highs if delta didn't give us a nice bounce as well and close in a similar manner. Oh, before I go on, the footprint deep dive session called Everything Delta gets into this delta bar in much greater detail. So review that. Definitely review that. You're gonna be able to put that. You'll understand that a lot more, I think. So what to expect? It usually occurs at a retest of a known level. Remember, I just showed you that on that one candlestick a couple of slides ago. Oftentimes open of the day. That was our first chart, our where it opened and we had that rejection. Turning points at support and resistance, where you get that other time frame trader really rejecting new prices at support or resistance. And then economic releases or news releases, where you get an impulsive move, quick move, but then it gets rejected, and you end up getting this rejection pattern on the candlestick or bar or footprint. So those are kind of the four scenarios that I look for, that you'll oftentimes see this pattern. And it helps to, if you know these are the four types of scenarios that it happens a lot, it helps underscore in your mind, well, this is a rejection. Because if you accept it as a rejection, then you can feel more confident that, oh, prices have been rejected and you're looking for a move in the other direction. So it provides that bigger picture context of what is happening. And because when we're focused on the current bar and we're trading, we almost always lose the big picture view, what's happening. And if you could project yourself in forward in time, 10, 15, 30, 60, or even at the end of the day, where's the price at the end of the day? It helps to understand if this is a rejection bar pattern. Well, you got to project in ahead to think how this might play out, and also understand what just happened in terms of the bar. All right, so let's move on to describing this a little bit more. What is the footprint color? What is the footprint color composition, order flow? These are the questions you should ask yourself when you look at these things on a footprint. What's the volume pattern? I just kind of showed you that. Does the bar delta confirm the responsive move? Again, I'm trying to pose questions you would run through in your own mind when you see this pattern develop, to help answer the question for yourself, that it is indeed occurring the way it should. Is the footprint color composition, are you seeing rejection in terms of the order flow? Are you seeing, what's the volume pattern look like? What about the delta bar? Is it confirming the same pattern we see in the rejection? All right, so here we go. This was actually that one candlestick pattern that we looked at 3-4 slides ago where it did the retest. So here we got the retest. Traded, bounced, came back, and here's what we see on the footprint. Now, most of these are of the volume, or I'm showing the footprint profile. It would have been really good if I would have done one in the imbalance footprint to see if we got a trigger down here, an imbalance buy trigger. That would be very, I really like to see that type of pattern. But here's our bar delta, or the delta bar. Notice it's a D bar study. And we got some stuck shorts down here in red, but the volume also tapered off as it traded down. All right, we can see how this thing closed right at its high. Nice strong buying up at the highs of it. This is nice. And you could see what it did from there. Also, here's where the delta bars is helpful. This looks like I'm looking at the cumulative delta, or basically the cumulative delta. It's set to accumulate. Notice how this, even when it was going sideways before it broke out to the upside, how it was still drifting higher. The delta, they were buying it. They were buying it a little bit through here, not selling it. So as it came off this double bottom, still buying in here before it exploded higher. And you can see what this again confirmed that strong pattern. So this, what we see, is the strong bar that we covered first. All right, let's move on to our indecision candle or footprint pattern. So this would be what a lot of times in the candlestick world is called a doji or something similar to that. To me, it's indecision. It's an indecision pattern, and it's a compressed body, usually around the middle of the bar. Ideally, that's what I'd like to see. So it's a compressed body. When I say body, I'm talking this part of the candle. These are the tails of the wicks, remember. So here's our body, and these are the tails. So it's compressed, and it tends to be in the middle, the middle area of the chart. It has wicks and tails, long wicks and tails on both sides. And it represents no overwhelming conviction. You can't get too excited about these. You have to be aware that the directionality, the ability to trade directionally when you're seeing this pattern is limited, and oftentimes you're going to see these bars, there's extreme overlap from one bar to the next. You don't see this pattern in a trending market oftentimes. It's indecision because the market doesn't know which way to go. It's maybe consolidation or range bound, and you're just seeing rotation, and it's choppy. A lot of times it's a choppy market, and you got to be careful or adjust your trading style when you're seeing this type of pattern. The main thing is, again, I want to bring your attention, it's indecision. It's not a lot of conviction. All right, so let's take a look. Here we have, you can see on the right, we got a candlestick chart, and this is, you could see these are a lot where it's, you're getting a lot of these dojis or basically open and closing at the same price. This is rare, you see something like that. But even if you were to look in here, you've got extreme overlap. So it's not just so much that we have this pattern of compressed or no body or long wicks or tails, but it's that we see significant overlap of bars. They often retrace significantly or 100% of the previous bar. And what you're going to see, let's move on to a footprint. The deltas are often, you're just kind of seeing the same thing with deltas. There's not any momentum or directionality. Often, again, significant retraces of previous bar, no direction in order flow or price, and open and close at the same price. So the market could move in either direction, but it could move. That doesn't mean you should expect it to move in either, like a breakout. It's almost like this is more of a mean reversion type pattern, and that's how you should be playing this. Order flow or delta is neutral. It's not really trending in any direction. Especially if you're looking at the cumulative delta. You want to look for early clues in order flow, though. If it does start to trend, then if the delta is starting to trend, that could be showing you which way the market may break out. However, it's almost just I think it's better just to realize that this is an indecision pattern. The potential for a big move is limited, and you should adjust trading accordingly. All right, so in summary, the footprint helps you, or doesn't help you, it allows you to see inside the bar or see inside the chart. We want to help you extract more information, helping you to understand what that auction looks like intra-bar. So it'll enhance your reading of the candlestick patterns. And I would encourage you, I know most of the examples I used here were of the footprint profile. I would look at this, experiment with it, look at it in a volume footprint, delta footprint, the imbalance footprint. Really take a look at those, because you may actually find those are better reads for you. They'll help you understand the order flow and volume and not just price alone. And in fact, take a look at the imbalance footprint and compare that with these patterns. We may do a follow-up to this using these same examples, but showing with the imbalance, because you want to look for those triggers at those extremes, and that I think you'll find that's a very helpful sign. And I guess last but not least, confirm bar and candlestick patterns. That is what we want to do with the footprint. That's why the inside the bar information is important, is to confirm what we see on these candlestick patterns. So anyway, I want to wrap up with that. Hopefully this will really open your eyes to these patterns you see every day on a candlestick or a bar chart. You're seeing these all the time. Hopefully this will really give you some added insight to understanding those. Even if you still just use those, should really provide some added insight to what's going on beneath the surface of the candle, and the footprints showing you what's happening beneath that surface. So anyway, I'm going to wrap up with that. If you have questions, don't hesitate to reach out to us here at Market Delta. We're more than happy to talk with you. Just pick up the phone or shoot us an email. Other than that, make a great day.